Welcome everybody. In today's lecture we will discuss these breakouts and these breakdowns, whether these are true breakouts and the price will go up even more, or these are fake outs and the price will go down like this. This lecture is important because I read it somewhere on Twitter that 95% of the retail traders lose their money during these breakouts or breakdowns, and I don't exactly remember the number, but most of the traders deposit into the exchanges during these breakouts because they think the price will go up even more, and this is the point to deposit. And then what happens? They lose their money. In today's lecture I will teach you a technique to avoid these fake outs and to catch these downward moves. In trading there is a famous quote that the previous resistance turns into support. So according to that quote or that strategy, this should be the support now. So what most of the retail traders or the new traders do is they tend to long here because they think this was the resistance and now it will offer the support, but the price comes down. Then they put the stop loss here because they think this is the previous support, so the price will come from here. But again the price goes down and the stop loss gets hit or they get liquidated. So if you are using the typical support and resistance strategy, that won't work for you. So how will you avoid these fake outs? You can see that the price was consolidating here or the price was accumulating here, and then suddenly it went up. Now to catch these moves, these fake outs, and to catch these downward moves, you have to look for other pairs which are called SMT pairs. I have already discussed it, but I will discuss here again. What are SMT pairs? SMT pairs are the correlated pairs. Okay, SMT pairs, these are the correlated pairs. Okay, what is correlated pairs? Like Bitcoin and Ethereum. You would have seen that when the Bitcoin price goes up, Ethereum also goes up. When it goes down, Ethereum also goes down. So these are the correlated pairs. Now in Forex, there are correlated pairs like Euro and GBP. If one goes up, the other also goes up. Okay. And now in indices, there are also correlated pairs like Nasdaq and SPX. So there are multiple correlated pairs, and believe me, you cannot trade without these SMT pairs because ICT in his Twitter space once said that he uses this SMT strategy in 90% of his trades. So if you don't use these SMT pairs in your trading, you can't trade. Okay, you are just wasting your time. If you don't know what is SMT divergence or SMT pairs, I will give the link in the description. I have discussed it in detail. Here we are discussing Euro, so the SMT pair is GBP. Now, if you look at GBP, you can see that here the price went up, okay? Like this support, this resistance was broken. But now, if you look at the GBP, the price was supposed to go up here too, but it didn't went up. So it means that Euro just went up to take some liquidity or to hit some stop losses and it will go down. Okay, so when you see such divergences that in one pair the price hasn't taken these highs and in other pair the price takes these highs, just like this. Okay, this SMT divergence. Whenever you see an SMT divergence at the top, this is a bearish divergence and the price will go down. When will the price go down? After a bearish order block like this one. You can see that this was an up closing candle and the next candle closed below it. So this is an order block. This is 4 hour. There will be also order blocks on the 15 minutes or 5 minutes. If you don't know what is order block, I have discussed it in detail with this SMT strategy in my previous lecture. I have given the link in the description. You can watch it there. Okay, when the order block forms here, the price goes down. You can see, you can catch this move by this SMT strategy, okay, or this order block strategy. Now if you look at this move, you can see that the price went down. Now whether it will continue to go down or it's a fake breakdown and the price will go up. Now you can see that both here took these lows. Okay, both of them took the lows, so there is no SMT divergence. But if you go a bit back, you can see that here it didn't sweep this low. Okay, and if you look at the GBP, GBP swept this low. Also you can see that there were some fair value gaps, those got filled. Okay, you can see this is a fair value gap here, these gaps got filled, and also there is an SMT divergence. So the filling of these gaps and this divergence makes it again bullish, and you can see the price went up. But below this there will be a bullish order block. Now what is bullish order block? I have already discussed it, you can watch it there. Okay, so once you get this SMT divergence and order block, it is confirmed that this was a fake breakdown and the price will go up as in this case. Okay, now I will show you one more example. You can see here again the price went up. Okay, this big wick, but if you see here the price didn't sweep these highs, so again there is an SMT divergence, so this makes it a fake move and the price then goes down. Okay, so this is how you can avoid these fake outs and fake downs. Okay,